Wall Street getting even more bullish on Tesla today, including Stifel raising its price target on that stock from $287 to $411. Now the highest on the street. And joining us now is the analyst behind that call, Stephen Gengaro, next-gen transport analyst at Stifel. Steve, it is good to see you. So you tell your clients, Steve, this one, it's still a buy. You do raise your target, so 411, that is up from 287. That's a nice size jump, Steve. How come? Walk us through it.
Thanks for having me. First, when we look at Tesla, I think one of the keys to remember is this is way more than an auto company. And when we start thinking about valuation, we worked hard to build in the full self-driving initiative and the Cybercab initiative over time. And the biggest drivers of the price target change come from those two factors. We actually slightly lowered our auto margins because of concerns about the $7,500 tax credit, but the upside potential over the next several years coming from those two initiatives is quite honestly very large.
Well, I think the over time and several years is what I'm going to zoom in on here, Steve, because it doesn't feel like we have a huge amount of visibility around the exact timing, both because the company's given us some clues, but their timing, they don't have a great track record when it comes to doing things on time. So how are you thinking about that?
Yeah, are you saying Mr. Musk can be a little optimistic at times?
I would never.
So when we look at it, and we've written this, we've said this multiple times, you have to believe in the medium to long-term vision to buy the stock. If you look at this, in the very short term, and obviously there's bears out there who think the stock's way overvalued. They're looking at what's the auto business worth in the near term and the obstacles behind these initiatives. And one of the comfort levels that increased for us was really around Elon Musk's involvement with the Trump administration and this expectation that the path towards unsupervised full self-driving becomes a bit smoother. Now, is it going to happen over the next quarter or two? Probably not. I think the stock's going to trade off data points around progress on Cybercab and full self-driving in the near term. But when we look at the long-term value in the name, and we're discounting pretty heavily back the expectations for those two businesses, and then we're basically looking at the midpoint of potential value, and we're taking 50% of that midpoint. So yes, we're clearly more optimistic and more confident than we were, but we're not baking in kind of the full upside of these two initiatives.
I'm curious, Steve, you talk about sort of medium to longer term. In terms of more near term, let's call it the next 12 months, was part of your thesis here too also you're looking at the EV market, and are you just simply expecting Musk to kind of consolidate share there?
Yeah, it's interesting because, and going into the election, we wrote a few pieces about this, both from an energy and an EV perspective, where one of the risks to Donald Trump getting reelected was the removal of these tax credits, right? And at a high level, people think, wow, that's bad for EVs. Well, it probably is. It probably does make them, it doesn't give you the kind of, obviously, the tax credit that lowers the price. But what it does do is the person who has the company that's got the largest cost advantage, being Tesla, the company that has the most market share, being Tesla, they continue to lead. And arguably, they probably can expand or at least maintain that market share lead for longer, which actually bodes well for Tesla relative to the peers. But that is a near-term headwind. The EV adoption rates have, the growth rates have slowed, right? EV adoption hasn't gone down, but the growth rates have clearly slowed near term.